Single stock future workshops are tomorrow. That's Tuesday the 21st. We'll be in Durban at Fawn Castle in Hillcrest. I look so concerned, David. Fawn Castle. It's where people frolic. You remember it? You've been there.
Oh, we were there, yeah,
Exactly.
sure. There's a nice pub outside, just around the corner there, Tom.
David thinking of the Hillcrest Hotel. Anyway, on Wednesday in George at the George Lodge International, and then on Thursday in Cape Town. So if you're down the coast, lucky you. Here in Johannesburg, we've got rain though, so things are not looking too bad at the moment. Anyway, you're in the coast, go and sign up for those single stock futures workshops, and you might make $1 million.
Absa Capital. Play to win and feel like 1 in a million. Absa Capital, a division of Absa Bank Limited, is an authorized financial services provider.
You're listening to the Market Update with Moneyweb, brought to you by the Right Choice investment from Discovery Invest. And we have the privilege this evening of entertaining in our studio the man who runs the most highly rated banking stock in the world. David, what's the normal price to book ratio now of banks? About 1? 1 and 0.2?
Maybe 1.22, yeah.
Okay, here we have Blue Financial Services. Welcome, Dave van Niekerk. On a price to book of 8 times. So if you were a normal bank, you'd be trading at about R1 rather than R6.
Not bad, but I'm not a bank, luckily.
Okay, how are you different to banks?
Well, first of all, Alec, and thanks for having me on the show, and hi, Dave. We very much a microfinance here, and that's what we do. We provide credit. We don't have any forms of deposit taking, no cash handling, no liquidity issues that the banks have got. So it's very different in terms of its structure.
I think the most important thing is that you're not geared like a bank. You've got
Correct.
Lots of capital. You take that capital and you lend it out.
That's it.
Effectively.
That's the basics.
Whereas some banks are geared 10, 20, some 30 times. Your gearing is almost 1-to-1.
Now you're on the right page, yeah.
But I'm also on the right page with AIG, which is now owned by the American government and one of the dodgy financial institutions in this whole credit meltdown. It's a 22% shareholder in Blue.
Correct. However, what it is a private equity fund that AIG actually runs. So AIG itself doesn't hold the 22%. AIG itself was managing the fund. They're one of the investors in the fund, but the fund is made up of a number of international investors that are invested in this emerging market fund, which is managed by AIG.
There's a lot of shares that are owned by this fund.
Yes.
How secure is the holding of it?
Well, we chatted to the guys that manage the fund, and they're in New York at the moment. And AIG's indication is that they've been instructed by their clients that are in the fund to hold this. It's a long-term stock.
Who are the other shareholders?
I couldn't give you the names offhand, Alec. I'll post them for you on the website tomorrow if you like. I'll ask AIG who the other guys are.
But with the credit crunch going on at the moment, with emerging markets falling out of favor, with financial services stocks under a lot of pressure, what I'm trying to get at is how firm are those holders?
Well, they're fairly strong in the money, so it's actually not a good time for most of those shareholders to exit. If they could exit now, we would be able to repay the loan, which was like a preference share structure, and we'd be able to repay it over a 2 or 3 year period.
So they're strong in the money. They're making money out of their investment.
If they convert to equity, and they're in the last conversion part of their conversion process now, if they convert, then they're up in terms of the money. If they default and say we'd rather get our cash out, we can repay the loan over a 3 year period. So you would much rather have the equity, do the conversion next year, probably around April, May, and then you're in the money.
But there were 48 million shares that have been converted.
Yes.
In fact, are now listed on the JSE. Are they not allowed to sell those
No,
shares?
absolutely. Those, they can redeem those at any specific stage.
So they can be sold any time.
Absolutely, they can be sold. And
have you found a buyer for those 48
Well,
million
we've
shares?
spoken to AIG in terms of that, and they themselves are saying that they're not going to sell them, but we've had several offers, including the likes of the Dutch Development Bank and a number of other institutions that are saying if AIG decides to part with those shares, we're one of the takers.
At what price, though?
Well, current prices will dictate.
At R6 a share?
Yeah.
8 times book?
Well,
3% earnings yield?
That depends how you look at it. Yeah.
Well, tell me when you say depends how you look at it.
Well, for a start, you have to look at the earnings potential of the company. We've grown off a very low base when we listed 2 years ago at a 7 million rand profit after tax. We're up to where we are today in terms of half-year results at 52 million rand for the first 6 months. The loan book is up to 876 million rand as it this half-year results. And
your equity is also up. So you've borrowed, you brought in money and you've lent it out.
Correct.
So it's not surprising if you bring in a lot of money, you're going to make bigger profits by lending out.
Absolutely, but you've also raised a lot of debt, though.
How your bad debts go?
Consistently stayed. We're providing around 6.3% for these half years, and last year we provided 6.1%. So we haven't had an increase in terms of provisions. Remember, most of our stuff, as we discussed in the last interview we had on the Power Hour, was most of our loan book is growing in Africa where we've got secure collection mechanisms. South Africa's fallen to 31% of the loan book as a whole.
That's important that we just retrace the footsteps there. In South Africa some years ago, it was outlawed that you couldn't take away from the person's salary, from the government employee's salary, to repay the debt. But in other parts of Africa, that is still allowed. So if you lend to people, you can actually take from their salary.
It's not specifically outlawed. It was a government decision at that stage that the South African civil service took that decision not to allow deductions.
Sure.
And most of the private sector followed suit. You've also got to remember that the South African markets are much more sophisticated and that you've got banking deductions at work, banking systems at work. Africa doesn't have that.
So if you're in Rwanda and you work for the government and you borrow from Blue Financial Services, say 10,000 Rand,
yes,
every month before you get your salary, you have to pay, or you as Blue can actually take the money off the guy's
correct.
salary.
We give an electronic instruction to the government who will deduct for us.
And the government's happy to do that.
Yeah, absolutely.
Well, it does make it a somewhat different business model, as you say. The other point with ARG, your partnership there, is that you are also partners in Nigeria.
Yes, correct.
And how has the problems that ARG has got into affected that?
Important to note is that ARG have met all their funding requirements for us. So we've got all the cash out of them that we required. And even in terms of Nigeria, they bought a stake in our Nigerian operation. And they paid a premium for their shares there. So if they decided to sell that stake, they're most certainly welcome to do so. But we've got right to first refusal ourselves and the other partner, the Intercontinental Bank.
Looking at your share price, it's held up incredibly well in this most difficult period that financial shares have seen. In fact, it's probably not only the highest rated banking share in the world, but it's also probably the best performing when you go back to May. In fact, you guys are at the same price you were then. What's the reason for this?
Well, we climbed quite nicely at a stage. After our Nigerian announcement of what we were doing there in terms of that transaction, that share turned up at 7 Rand. And as the markets have started to come down, we've started to fall to our current levels of around 6 Rand 10. The other thing is our shares fairly tightly held. Most of the companies that hold the shares, as well as the shareholders that are privately held, have got long-term plans for the company. We as management and founders of the company still have around 50% of the company under our control. ARG owns 22, as you know. We've got the likes of ECP and African Fund. We've got the Stanlibs of the world, and they've all indicated they're in there for the long haul.
Dave van Niekerk is the Chairman and Chief Executive of Blue Financial Services, today releasing interim results for the 6 months to the end of August. And it's, the comparisons in this instance are completely odious, irrelevant. Loan book up 236%, 876 million. A year ago it was at 260 million. So growing like Topsy. Earnings up from 20 million Rand this time last year to 52 million Rand this year. However, the headline earnings annualized give you an earnings yield on this share of 3.7%. Very highly rated. Dave's got a lot of treadmills to be running along, but I guess you're happy you can achieve it.
Thanks, Alec. Yes.